Welcome everyone to Vested Interest. This is Shane back for another Stock Pick of the Day video. It is Monday, October 28th, quickly wrapping up another month here. It won't be long before we're into November. So if you plan on doing any investing here in October still, you've got 4 days left. November 1st, I believe, is on Friday. So just, 3 days left now because Monday's trading day is over. But today we're going to take a look at one out of the financial sector, Flagstar Bank. Now, before we get too far in the video, if you could do me a big favor and hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the vested interest community. Click that subscribe button down below. Click the notification bell so you're notified whenever we put out any new content. I do this Stock Pick of the Day video series Monday through Thursday whenever the market's open. We take a look at a stock that's pulled back on the day and see if it's presenting any value. Drop a comment down below. Let me know what you think of the video. Let me know what you think of Flagstar Bank. Is it in your portfolio? Is it one you're watching? Maybe you're part of the group that was selling today. Let me know. And if you have any questions, go ahead and drop them down below. I also take subscriber and viewer suggestions. So if you have a company like Flagstar Bank you'd like me to cover in the Stock Pick of the Day series, drop it down below as well. I'll work it in the rotation on the day it's pulled back. And a new feature for the channel. Now that we've met some of the qualifications, the channel has been monetized. So hopefully I make money off of the commercials that you see. So if you see any of those that you're interested in, watch them to the end. If you're on the video, that's one way that us people who are on YouTube who provide content, that's one way we can make money. Another way is there is a thanks button. If you wanted to make a donation to the channel and help financially, I think there's a $2, $5, $10, maybe even a $20 tier there. No pressure. You definitely don't have to do that. I understand we all have enough to pay for, but if you are financially able, that would help out the channel as well. Everything that I do or will make, I haven't made anything right now. I've been pushing out the channel here for 3 years and just finally able to monetize the channel and hopefully get some, like I said, ad revenue. But again, if you would like to help out the channel, that is an option. And the funds will be going right back into the portfolio. I haven't decided yet if I may split them up actually and do half into my portfolio and half into my daughter's custodial accounts and just use the extra funds for that purpose. I really do appreciate everyone who's taken the time to do that, and a special thank you to all the subscribers out there. The channel continues to grow because of people like you. Now, this is the vested interest stock screener. This is the criteria we will be going through in the video. It's how I look at a company on a high level. Thousands of companies out there. This gives me a quick way to screen, to go through and look at some initial metrics to see if I want to add the company to my watch list. Once it's added to my watch list, it must meet 5 of 8 or 6 of 9 if it's a financial company, and this one is, so we will look at price to book for this one. If it does make it onto my watch list, 6 of 9, then we do more of a deep, or I do more of a deep dive into the company's financials, look at its income statement, its balance sheet, stuff like debt to equity ratios, assets over liabilities. Are they paying down debt? Is their revenue growing over time? Are their margins expanding? PEG ratios, a lot of good other information in their balance sheet and income statement. And if you don't want to do that kind of detailed analysis or even understand how to do it, stick to ETFs or index funds. Warren Buffett famously recommends the S&P 500. So something like VOO, VOO, which is a Vanguard S&P 500 ETF. SPY is another one. Several other ETFs out there that track the S&P 500. So again, if you don't want to do any deep dives into exploring individual stocks, go ahead and stick to index funds and ETFs. And then as you learn, over time, maybe you can add some individual stocks later on. Now, back to Flagstar Bank. Check them out at www.flagstar.com. That's www.flagstar.com. That is their homepage where I pull this information from. And again, they are a bank. Flagstar Bank is a diversified consumer and commercial bank grounded in building relationships to meet clients where they are on their financial journey. So it's personal banking, small business. So if you have a small business, you need a bank, Flagstar would help you out with the same things you would typically do for yourself, right? Loans, regular banking account, checking account, commercial, private banking, that's your personal savings and checking account, money market accounts, that sort of thing. So they are a typical bank. You may be aware of them, maybe you bank there. Now, the reason we are taking a look at them, down 8.26% on the day, we are talking about Flagstar Financial, ticker NYCB, out of the financial sector, closed out the day at $10.55. Looks like they're up slightly in the after hours whenever I pull this information here. 52-week low as low as $5.10, as high as $35.47. So they are closer to their 52-week low, though they are not within 15%. market cap of 4.904 billion, beta of 0.99. They did not have a PE ratio listed, so that leaves me to believe it's negative. EPS is negative at $14.50 negative, so don't like that. Earnings date October 25th, so that was actually last week here. So maybe something in the earnings date that was reported late last week that is finally showing up in the stock price today, or maybe they dropped late last week and I didn't look at last week's numbers, so maybe they're just continuation of the drop from last week after they released earnings. I'm not sure, but you would definitely want to look at their earnings if you were interested in this company. Forward dividend is 4 cents. It looks like right now they are a quarterly payer, I believe, so that doesn't seem right, but that's very low with a 0.38% dividend yield. Again, very low. That seems off a little bit compared to the numbers I'm getting over here, but we'll see that in a minute. Ex-dividend date, September 6th. Looks like they paid out on the 17th, so if you were to buy them now, you're going to have to wait a couple months to get that next dividend. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from, $12.38. So they do see it going back up, but not even close to where it was at its 52-week high here. Right? Something in the earnings went haywire. Maybe they've got some loans that they're worried about, people not being able to pay. Something in their earnings came out that really has dropped this one down. Jumping over here to dividend yield theory, I like to look at dividend yield theory and see if the company is potentially showing undervaluation. To do that, we look at their 5-year dividend yield average, 7.49%. We compare it to their current 0.38, or over here where it says forward 0.38, same number. Now, since it is lower than their 5-year average, that speaks to overvaluation. So this one is potentially overvalued and significantly overvalued, at least according to dividend yield theory. Payout ratio here says 20.99, though I'm questioning that. You'll see why here in a little bit. We'll take a look at stockanalysis.com and see what theirs shows. They don't line up, I'll just say that. We went over the ex-dividend date. Now we do want to look at price to book here. As you can see, their current price to book is at 0.54, so that is under 1. So that says they're potentially undervalued, at least according to price to book. And according to their history over the last year or so, a little over a year, 0.79. You could have got them a little cheaper here at 0.33, 0.43, but 0.54 is relatively cheap compared to where they've been over the last calendar year. But all year they've been under 1 typically being fair value for banks. But don't just blindly look at that, because, again, there could be other reasons that the price to book is so low. They could be in financial trouble. 2021 here, going back to free cash flow. I like growing free cash flow over time, because typically if a company has growing free cash flow, they have growing dividends as well. 2021 here, you can see $286 million in free cash flow. Big jump up in 2022 to 1.02 billion. 2023 down to 197 million, and the trailing 12 months at 2.2 billion. So they are up and down all over the place. They are repurchasing shares, though not a significant amount. 16 million here, 24 million, 12 million, 10 million in the trailing 12 months. So the numbers are kind of up and down here. I would not give them growing free cash flow just because of this big drop here in 2023. It looks like it was growing steady in 21, 22. Big drop in 2023. Looks like it's back to growth in the trailing 12 months anyway. Now, jumping over to stockanalysis.com, this is another source I go to for information. You pick any sources that you like. I just recommend more than one source so you can make sure the information you are looking at is accurate and up to date. Now, they do have 14 stock analysts that have taken a look at this. They call it a consensus hold. Low estimate of $10.50. That would represent a 0.47% decrease from where it closed out the day. Average estimate of $14.18 would represent a 34.41% increase from where it currently sits. And their high estimate of $21 would represent a 99.05% increase. All the while, you could collect those 4 pennies per year, it looks like. Return on equity and return on invested capital are 2 metrics that I like to look for to see how well a company is reinvesting its capital back into itself. I like 10% or better for both of these. Return on equity, negative, 37.16%. No way, that's terrible. Return on invested capital, not listed. Leads me to believe it's negative also. EPS, I like 5% forecasted or better over the next 5 years, not listed. So can't look at that, and I throw in revenue growth also, though it's not one of the main metrics I look at on the initial screener. This is more towards the deep dive side, but I like to throw it in because they're right by each other anyway. All right, now let's look at the dividend history. They are saying they're a quarterly payer. They do not list the dividend payout ratio, so it leads me to believe it may not be 20%. They do say dividend growth is negative, so they've recently cut their dividend. Look, that's down to that 1 penny, right? So that's why they're so low. Negative 65.69% dividend growth. I don't like that. I like growing dividends, not dividends that were recently cut. Buyback yield is negative. That's not good. negative 28.55%. Shareholder yield is negative 21.92%. The numbers overall on this one do not lead me to have a lot of confidence in this company. But let's keep going here. They do pay out on the February, May, August, November timeframe. That's off the typical schedule for most companies. And going back in time here to February 2022, they were paying 51 cents, much better than what they're paying now. And it looks like they held it there for at least a couple years. And then in 2024, they cut the dividend to 15 cents. Cut it again June 2024 to 3 cents, and then cut it again most recently down to a penny. So they've been on a kind of a history, at least over the last year, of dividend cuts, which I do not like to see. So let's look at the screener and see how this one stacks up, but I don't see a lot of green, or don't think we'll see a lot of green. And we do not. So back to the vested interest stock screener. Start with understand the business, right? That's where we go to their homepage first. So check there. Almost every company gets a check there. It really has to be an unconventional company where I just can't figure out how they're making their money, right? Banks take in deposits, they do loans, whether that's commercial or private or personal. So I mean, it's a bank, right? That's what they do. They charge you fees for using their ATMs. That's how they make their money. Growing free cash flow over the last 4 years. Nope, they had a down year. So no growing dividend. No, it looks like they're actually been cutting the dividend this year. Dividend pay ratio is under 75%. Well, it said 20%, but I did not give them a check because I could not verify that. So no check there. If you want to give them a check, that's fine. Check valuation based on dividend yield theory. Dividend yield theory says it's potentially way overvalued. Buy below current cost basis. Nope, not within 15% of a 52-week low. Return on invested capital, return on equity, both. Well, return on equity was negative. Return on invested capital wasn't listed, so no check there. Earnings per share growth, NA, they didn't have anything listed there, so no check there. Now, according to price to book, they were potentially undervalued, so check there. So 2 of 9 does not get them anywhere near my watch list. Let me know what you think of Flagstar Bank in the comment section down below. Looks like they are having some troubles, and the 8% drop on the day may be more than justified. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So again, drop a comment. Let me know what you think of Flagstar Bank. If you have any stocks you'd like me to cover in the Stock Pick of the Day series, drop that down below. And the most newest addition to the channel here, like I said, they do have that thanks button there. If you wanted to donate, go ahead and hit that as well. I really would appreciate it, but no pressure there. I definitely understand if you don't have the money to do so. We all have enough to pay for out there. Well, appreciate all the subscribers out there. You guys are awesome. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I am not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria. Or seek the advice and counsel of a certified financial advisor.